Hello and welcome to Startup Street. I'm Arundhati Ramanan, and with me as always is Shruti Mishra. These are the top headlines from the startup world. Namma Yatri's parent firm MTI has acquired Dutch mobility startup Automicle to take its zero-commission open protocol model international. The deal marks MTI's formal entry into the European market.
Lending solutions platform Ansia has raised $3 million in a seed funding round led by Pavestone. The proceeds will be used to accelerate growth in India as well as support the company's entry into the MENA region and North American markets.
Anthropic PBC is considering going public as soon as October as the artificial intelligence company races with rival OpenAI to hold an initial public offering, says Bloomberg. Goldman Sachs Group, JP Morgan Chase & Co. and Morgan Stanley are expected to be under consideration for key roles on Anthropic and OpenAI's listings.
SoftBank Group has secured a $40 billion loan through a bridge facility to fund further investments in OpenAI and for general corporate purposes. The Japanese investor has previously agreed to invest $30 billion in OpenAI through its Vision Fund 2. The bridge loan is unsecured, the company said.
Shield AI is raising $2 billion in a new funding round at a $12.7 billion valuation as the defense technology startup looks to expand its AI-powered software amid growing use of autonomous tools during conflicts. The Series G round was led by Advent International and co-led by JP Morgan Chase's Strategic Investment Group.
Well, those were the headlines we've been tracking for you this evening. Professional services automation platform Rocketlane has raised $60 million in a Series C round led by Insight Partners, taking its total funding to $105 million. Now, this comes on the back of strong momentum, with the company more than doubling revenue, expanding globally, and launching what it calls an agentic execution platform designed to embed AI directly into enterprise workflows. At a time when companies are under pressure to deliver tangible ROI from their AI investments, Rocketlane is betting big on what it calls the outcome era, where AI is judged not by promise but by performance. Joining me now to talk about the road ahead at Rocketlane is its co-founder and CEO, Krishnan Ganeshan. Sri Krishnan, welcome to Startup Street. You've more than doubled revenue in the past year. Your average deal size has grown 4.5x since 2023. Where do you stand today in terms of revenue, and what's driving this sharp inflection from Series B in 2024 to Series C now? What fundamentally changed in the business to fuel this growth?
Thanks for having me on today, Shruti. In terms of revenues, we don't reveal specific numbers, but I can tell you the themes, what's driving this growth. I would say largely three themes. One is AI has been a huge tailwind for us. Just the fact that all of enterprise AI is very services led. So every AI company, every tech company has become an AI company, and all of their, work with their customers is services led. The whole industry pivoted from PLG, product led growth, to services led growth. Secondly, we've had good TAM expansion. We've gone significantly upmarket. We have multiple public companies using us. We've also started serving a lot more pure play services companies. We used to serve services teams inside product companies. So I think all of that has helped us grow faster. And then in general, we've had higher win rates in the market just because we have the most ambitious AI play in the space, and that's definitely helping us.
All right, Sri Krishnan, let's talk about Nitro, your agentic execution platform. What does it do that traditional PSA tools don't? And you're claiming up to a 50% reduction in delivery effort. Where are these efficiencies really coming from? And with 750 plus customers, including names like Intercom and Notion, what's the use case that's truly resonating?
Sure. So I think most PSA is known for doing the following, right? It helps you plan the work, staff the work, measure the work, manage the work, maybe communicate the work in some cases. That's where it ends. Our PSA also gets into do the work. So that's the big difference. And that's how the efficiency is generated. Because now if you think about the kind of work that a tech consulting firm or a tech implementation team in a product company does, it's about solutioning, documenting what your solution, configuring your product offering for the customer, doing a data migration for them, testing what is set up. And we are bringing agents into every primitive of the type of work that they're doing. So agents for data transformation, validation, agents for configuration work, agents for the documentation work, etc. So there is huge efficiency when people start delegating the work to these agents instead of doing it
Understood.
manually. Yeah.
Okay, so if AI agents begin handling migrations, documentation, and testing, what does that mean for the traditional services workforce? Are you replacing human effort or augmenting it? And where do you draw that line?
We are replacing the low value human effort is how I see
Okay.
it. And I think the way this really changes the game in services is uh, we impact three things, right? One, your work happens faster, your work is going to cost lesser, and it's going to be less risky. And that means there are going to be a lot more companies willing to partner with you. People are going to be willing to take on more services when it
Okay.
becomes faster, cheaper, and better.
Okay, so Sri Krishnan, AI promises efficiency, but also raises concerns around accuracy and control. How are you ensuring reliability when agents are executing these mission-critical workflows?
There is a human in the loop element to the software, and also there are new design patterns that have emerged over the last year that help you get to better reliability. Like agents reveal their process, they show their plan of what they're going to do, you can correct the plan, and then they work with you.
Okay, you've expanded to London, New York, and San Francisco. What are your global expansion plans going forward?
We continue to grow in these markets, in these cities, but as and when we have a little bit of a density in a new city, for example, we have a few people in Denver now, we may just make it a official office and make that one more hiring hub.
All right. Gartner pegs IT services spending at nearly $1.9 trillion. How big a slice of that are you realistically targeting, Sri Krishnan?
Shruti, we dream, one step at a time in a way. I think just the next milestone is let's get to 200 million in revenue, and then we'll get to the next dream. But I think I can easily see getting to a few $1 billion in revenue as you get to do the work, right? So the do the work piece is very valuable, and the revenue ramp will be fast.
I understand you did not give me the current revenue numbers that you have today, but what about the revenue targets going in the future? Does the road to profitability look like?
Yeah, I think at scale, as we get to as I said, $200 million, etc., as future goals in the coming years, there is a very clear path to running this profitably. I think even today, most companies which are focusing on growth, if they decide to take a different approach, you can be profitable today if you decide to. I think when you're investing further in growth,
All right.
when you're accelerating, you do that.
Sure. One final question, Sri Krishnan, before I let you go. On competition, how do you view this landscape, this competitive landscape that you're in, and what do you see is your biggest moat?
We have legacy competitors who aren't getting into the AI for execution game, and we have new competitors who are purely focused on the AI for execution part of what we do. I will focus more on, I would say, the new competitors who are emerging, very small today, are probably the bigger threat. And for us, our moat today is we are a very holistic solution, right?
So you're saying the new competitors are a bigger threat than the incumbents?
That's right.
Okay. So there's no real threat from the incumbents who are adding AI layers. I'll have to wrap up at this point. Many thanks, Sri Krishnan, for joining us on Startup Street today. Wish you the very best for all your growth plans.
Thank you, Shruti.
And moving on what's brewing today, Plum is betting big on redefining how India experiences employee health benefits. This Bengaluru-based insurtech platform has raised 193 crore rupees in a Series B round led by Peak 15 partners, even as it turns EBITDA and cash flow positive, a rare combination in the startup ecosystem. With over 6,000 enterprise clients and more than 5 lakh claims processed, Plum is focused on fixing what it calls the most critical moment in insurance, the claims experience. Now, with fresh capital in hand, the company is looking to double down on AI-led operations and expand into a full-stack employee healthcare platform. Joining me now to discuss this further is Abhishek Podar, the co-founder and CEO of Plum Insurance. Abhishek, thank you so much for taking time out and being with us on Startup Street. Let's sort of go back to the beginning. Let's start off with the core idea. What was broken in the traditional employee health insurance experience, and how did Plum sort of set out to fix it?
First of all, thank you so much for having me here. When we started this late 2019, I think we originally started with the problem of building a supply for the smaller organizations that wanted to give really high quality insurance and healthcare to their employees. The industry that time was very dominated or very focused towards the large enterprises. But let's say you're a founder and we had Rocketlane previously. Think of Rocketlane starting in 2020 with a 5-people company. That kind of organization didn't have any option. And when they started, they would have onboarded Plum, and Plum was the only option. So that was a core problem that we started. Very quickly, we realized that the problem is not just about creating a supply for the organizations, but fundamentally, when you're giving insurance, the product is the claims. When you talk to anyone who has gone through a claims experience, 9 in 10 times, people are not happy with the claims experience. It's either the speed or what is approved or what is disapproved or what is rejected. And we very quickly, I would say, pivoted to focusing on claims experience as the core thing that we are building.
All right. And, if you could sort of then help us understand the scale that you have today, right? 6,000 enterprises and over 500,000 claims processed. What does this sort of say about the size of the opportunity in India's employee benefits market? And, what do you have on offer?
Absolutely. If you look at, we look at the market from two scenarios. One is what is the existing spend on employee health insurance, and that spend is roughly 60,000 crore today. But what's more interesting is this is one of those markets which is very large, but still has a huge tailwind. This market is growing at 20% for the last 20 years, and you will not find a market which grows at that fast a speed for such a long period of time. But what's more interesting is not just the size of the market, but how underpenetrated the space is. Despite that amount of spend, if you look at what percentage of population is adequately covered in India, our estimate is roughly 20-25% of the Indian population is adequately covered. The rest 75% of the population still don't have insurance. They may have insurance for the namesake, but it's not really insurance for them. So for us, that is that's a much larger opportunity, which is, can we eventually get India to a 90-95% coverage?
All right. And you've just raised this 193 crore rupees, right? How essential is this fresh capital at this stage of growth, and how do you plan to spend the funds? Any new offerings in the pipeline?
Yeah, what's more interesting for us is, I think you touched upon this earlier, we as a company are actually profitable. For us, we look at this not as a way to survive, but this is an opportunity for us to accelerate. This is an opportunity for us to get what we have built, get our product in the hands of more people, and eventually get more people insured. So the way we are spending this money is, one, just acceleration of a go-to-market, so that we have, right now we have 6,000 companies. Our goal is how do we get tens of thousands of organizations insured, and hopefully millions of people that we are able to impact. Number two, we're going to invest a lot on healthcare. For us, health insurance was the starting point, but the core mission of Plum has been how do we impact the health of the people. When you impact health of the people, or when you want to impact health of the people, you have to start with really the preventive care, getting people go through annual health checkups at a regular interval, get people the right kind of primary care, and those are the products that we are now investing into.
All right. So those are the products that you're investing into. You, as you pointed out, right, you have turned EBITDA positive. You're profitable now. Take us through this revenue growth journey, and how sustainable is this profitability? Where do you hope to end this year?
Absolutely. Our current growth rate is roughly 80-90% year on year. And the goal is that we can actually accelerate from here. So far, we were really focused on getting to a unit economics that we can say that, hey, this is actually a profitable unit economics that we are building. So the goal was not to show a 30% EBITDA right now. So we'll this year we will end at maybe like a 5% kind of a profitability. The plan going forward is, again, not to showcase a 30-40% profitability, but make the business really efficient, the core business really efficient, and whatever profit we are able to generate, invest that into building better products and more healthcare products for the same set of customers that we are serving.
All right. And, before I let you go, you also pointed out about how crucial AI is, right? So 78% of your claims are now getting resolved without human intervention, which is up from 34% in 2022. What's the ceiling on that number, and how does this AI investment from this round push it even further?
No, absolutely. I think AI has been a huge, huge accelerator for what we are building in two ways. One is it really allows us to speed up everything that we're delivering to our customers. There is a limit to what we can do if everything has to be done by the humans. Let's say the humans are going through every single document for approval of claims. No matter what you do, it will take minutes to hours depending on the volume. And especially as you start scaling up, as you start accelerating, that speed continues to go down. What AI has enabled us to do is actually reduce that speed as we scale while maintaining the quality of experience that we are delivering. So one of the goals is how do we use AI to become more and more efficient? But it's not just efficiency for the internal profitability, but efficiency to deliver better speed for our customers.
Absolutely. Better speed and quality is what's essential while you're using AI. But Abhishek, we're completely out of time. But thank you so much for joining us on the show, and we wish you all the best on your journey going forward.
Thank you so much.
Well, on that note, it's time for us to head into a short break. But coming up, from the forests of Jim Corbett to the front lines of AI, India's top VCs debate the real opportunity and the hard questions around capital, deep tech and global scale. A special report on the other side.
Welcome back. You're still with us on Startup Street. Moving tech innovations, the force behind Namma Yatri has made its European debut with the acquisition of a Dutch mobility firm, signaling a big shift from local scale to global ambition. The company is now looking beyond traditional ride-hailing, targeting niche, high-value segments in Europe, while also bringing global innovations back to India. Aishwarya Anand is here with all of those details. Aishwarya?
India's open mobility revolution is officially heading west. Moving Tech Innovations, the parent company of Namma Yatri, has acquired Dutch mobility firm Automicle, marking its first major foray into Europe. MTI has already processed over 150 million trips in India, putting more than 2,500 crore directly into the pockets of drivers by eliminating middlemen commissions. Now, they are taking that city-first philosophy to a continent at the forefront of sustainability. But this isn't just about taking autos to Amsterdam. MTI tells us that they are specifically targeting underserved, high-margin European segments like care mobility services for senior citizens and people with disabilities, sectors currently fragmented under traditional giants like Uber. The deal is also a two-way street. MTI is in active talks to bring Automicle's advanced digital parking tech back to Indian metros to solve a chronic urban congestion. This expansion comes on the back of a fresh 40 crore bridge round that the company has raised as it gears up for a much larger institutional fundraise later this year. With India-EU trade discussions gaining momentum, this deal signals that Indian-grown tech protocols are ready for population-scale impact on the world stage. Back to you.
Well, thank you, Aishwarya, for these details. Appreciate you joining us. Moving on, away from boardrooms and into the forests of Jim Corbett, some of India's top venture capitalists gathered to take stock of the country's AI opportunity. But beyond the optimism, there are tougher questions at play around long-term capital, real innovation, and whether investors are ready to back deep tech at scale. So where is the money actually going, and what will it take to build globally competitive AI companies from India? My colleague Aishwarya Anand brings you this special report from TIE Delhi NCR's Capital Connect. Take a look.
The AI summit may have wrapped up with billion-dollar projections and bold claims, but beyond the stage lights, the real test begins now. Will the Indian venture capital actually fund this ambition? We are here at TIE Delhi NCR's Capital Connect, the Jungle Edition, in Jim Corbett, where over 80 venture capital investors have stepped away from boardrooms and pitch decks to talk candidly about what comes next for India's AI moment. Over the next few minutes, we will speak to some of India's most active investors to understand whether this is conviction capital at work or cautious optimism dressed as ambition. Are Indian founders building real AI, or are we mostly funding wrappers around global models?
From the very beginning, our focus was unless you add value, you have no reason to exist. Long run, it never works, right? And more funds are coming to the same conclusion. So what you are seeing an increasing trend towards quality of where the IP really exists, where they have actually innovated at the AI layer and not just building the model is not AI. There's a lot more to AI. How do you make the product work? There's a whole piece of orchestration. There's a whole piece of where the knowledge resides, how memory works. And none of this is solved yet. This is all hard engineering, hard AI problems. And startups that are solving these and building applications which are actually useful, right? Which actually solve a problem. And typically we've seen that works in a vertical.
The deep tech and AI need nearly 8 to 10 years of patience. Do you think our Indian LPs truly ready for that cycle?
It's a very well, I would say, broadly spread capital in the early stage ecosystem. So seed to, I would say, Series A. When it comes to Series B, I don't think there is enough capital focused on deep tech at that stage.
Correct.
I think that gap is going to hit most of the founders.
Is AI fundamentally different from SaaS, or is this just the next software wave that we're seeing?
No, I think AI is different from SaaS in a very fundamental way, in the sense that there is no rule that is being applied to how things move within the enterprise, how data moves within the enterprise. The rule is, to put it quite simply, being figured out at runtime.
Okay.
And that's why we say AI is non-deterministic versus software being deterministic. And where software focuses on automation, AI focuses on intelligence.
Okay.
So judgment calls that used to be taken by humans are being taken by machines now.
Okay.
And that's why I do believe that the entire suite of enterprise applications will be replaced with AI applications going forward.
Are Indian SaaS founders actually pivoting fast enough to turn their companies into AI ones?
I don't think the playbook is for existing SaaS companies to become AI companies. I think what we are backing is for AI native applications companies to actually replace existing software in enterprises.
So then what happens to the SaaS companies then, who weren't AI first?
I think some of them will evolve and others will die.
Do you think that we need India-built foundational models, or should we dominate AI applications instead?
As a fund, for us, the answer has always been very clear that applications is where capital compounds.
Is too much capital chasing Gen AI while climate and hardware AI remains underfunded?
I believe yes, there's always a flavor of the season. Therefore, there is a lot of capital that's chasing Gen AI. But having said that, I think the realization is that hardware cannot be, ignored per se. Inevitably, capital will chase hardware at some point in time.
From the perspective of frontier AI, what is that opportunity on that front that you think India is missing currently right now?
I think India per se has always been a follower in some pieces rather than a leader in any technology.
You can build excellent applications, excellent language models, but if you don't have the infrastructure, don't have the semiconductor layer, if you don't have the energy layer addressed, you don't have these 3 layers addressed, all those that you'll develop will always depend on somebody else outside of India.
If there's one takeaway from these conversations, it's this. India's ambition is real, but capital is getting sharper. Investors here say they're willing to back deep tech and long gestation bets, but only if founders move beyond wrappers, build defensible technology, and show real global potential. The next wave of unicorns, they believe, may not come from traditional SaaS or quick scaling consumer plays, but from AI-led research-heavy and sector-specific innovation. The summit conversations may have set the tone, but here in Jim Corbett, it's clear that execution and capital discipline will define India's AI story.
It is Friday and it's time to take stock of all the big deals from the startup world. This week has seen a total of 18 deals worth $263 million. According to Venture Intelligence, some of the notable deals include Rocketlane, which raised $60 million in a Series C round from Insight Partners. Wealth management player Neo Investment Value Advisors raised over $53 million from MUFG Innovation Partners, Peak 15 Partners, TVS Capital and others.
Well, that's not all. Commercial EV maker Euler Motors backed $47 million in a Series E round from investors including Ulterior Capital, Plum Ventures, Hero Motorcorp and others. Data curation firm Deccan AI raised $25 million, while insurtech startup Plum Benefits secured over $20 million from investors including CMO Venture Partners and Peak 15 Partners. According to Venture Intelligence, so far this year has seen 253 deals worth over $2.2 billion.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. More news and updates right here on CNBC TV 18.